All right, good day, everybody. Still here for the Daily Market Pulse for Monday, December 16, 2013. We saw stocks rising quite aggressively. The markets they were down last night in terms of the futures, and at some point during the night, including this morning, they were racing higher, triple digits on the Dow Jones futures, and very good numbers on the Nasdaq as well. Although a lot of that faded later in the day. But all this based on a bounce that we were possibly expecting. We were discussing some of this that it's kind of like do or die. It had to do something based on levels. It would make sense that there could be a bounce. The question was how high and could it be sustainable and last. We saw it happen on a previous Thursday, Friday. It was Friday when we had that big rally, and since that rally day, the markets had collapsed, and then we had another bounce, and so everything's kind of flagging for the most part, really. The whole trend overall still is to the downside despite today's move. We'll take a look at that here shortly, but essentially up in higher volume, which of course is an accumulation day versus a distribution day. But that doesn't knock any of the distribution days off. We still have 6 and 5 on the S&P, Nasdaq respectively. The Dow just a little bit higher than the 8-moving average as well as the Nasdaq today. TSX, S&P still below their 8-moving averages, so there's still work to be done on the long side. But we'll take a look at the charts just to see what's going on. But all this leading up to, and of course, in anticipation of the Fed's rate decision and announcement on Wednesday. I think there's a lot of people thinking that the good news will come out of it. We'll see if that's the case, if they're going to bake it in before or after, but we'll see. Let's look at the charts. Okay, we have the Nasdaq. I'm sorry, the Dow Jones. Dow Jones on the screen, and we got going on here, so we can see we got a channel essentially. This is just flagging. It's obviously it's a bull flag. It's come down. There was a hotami on Friday, and of course what that means that the selling likely has slowed down or stopped. We had 3 consecutive downside days. We knew that was possible to see a bounce to follow that, and sure enough there was today. That was clear into the 8-moving average, into the 20-day moving average, which is rolling over in flat. But now at the top of that little channel, that little trend line area, it was oversold on the Dow Jones here as well. So let's see what that does going forward. A little bit of a rejection. You see a little bit of a shadow at the top, almost closing below the moving average, but that's kind of where we stand right now. We're still in a flag formation. So it's again, it's one of those do or die kinds of things. It's 16,000 will be a key psychological number naturally to try to surpass. That happens to be just above the 20-day moving average, and also in the vicinity of where the rejection essentially was after that Friday move that we had just about a week ago. So important. You can see when we had the push up, we had a little small candle at the top. It rolled over. We have a small little candle at the bottom. It pushed up. But it took 4 days to come down. It took 1 day to come back up, essentially. We will see. We will see what happens here. It's not clear to me as to what's going to happen here. The flag and everything else certainly looks like it has a shot to come back up through that and try to reattempt to test the highs of 16,100 or so. But in the same token, everything still seems to point ultimately to a downside just because of the put-call ratio, because of the channel, because of the distribution days. There's just a number of things that just seems to point toward more downside than upside. But again, you could always be proven wrong. So you go with what you got. Right now there was a hotami and a Morningstar formation that occurred today. Decent formation there for sure, but still in a channel and still needs, I think, a little more oomph to get through 16,000. Then it would be safer to think about 16,200 at that point as well, and more distribution days being erased if that's even possible at all. So with that said, let's move on to the now that we have the S&P that kind of set up, let's look at the S&P. There's a little flag-like formation again. There's the bounce off the polarity area of 1775. We talked about that, the slowing down of the selling. You saw the red, large red, 2 smaller ones winding down right at polarity. It was a critical spot with rising trends. We knew the trends were still on the bull side, and this was going to be an important level to hold if they were going to hold at all, especially after 4 days of selling. You'd think with an oversold state that they would bounce, and sure enough they did. Question is how high and how long will it last? Still overall, as you can see, the short-term trend to the downside, having the 8 crossed below the 20-day moving average, and that flattening actually starting to roll over as well. 1775 becomes an important area, of course, as the support area still, and remains 1800, the round number above, as the likely target and resistance as well. So let's see what they can do with it. NASDAQ as well. Rising window today on the NASDAQ. Again, big sell-off day, two sideways days, holding around the 20. And right at 4,000, of course, as well, another round number that's of significance. Right above at 40.70, 40.75 is the resistance target area above. So possibility with this closing above the moving average, this can climb up through into that area again. But again, overall, now this is the one index right now where the 8 moving average has not crossed below the 20. If it ever does, if this window, rising window today is negated and we have the 8 crossing below the 20, at that point I think is when the markets will really show signs of extra weakness, failing and falling further lower below 4,000 naturally. So we'll see if that is the case or not. Let's look at the TSX. So you can see the TSX here, the Canadian, the Toronto Stock Exchange, was in fact already in a decline. Let's actually put there's the channel that it's in, similar to what we just showed you on the Dow as well, and that's still in a channel below the moving average, also below the 50-day moving average. Well, lower lows, lower highs, after essentially creating kind of a muffin top and retracing. If we look at the overall big picture here, this is the one index that we can actually do fibs on and actually makes sense. It's into the 50% as well. So it came 50% lower the part of the channel. It made sense with that lower shadow that occurred on Thursday that we might be seeing somewhat of a bounce. Friday's quiet day still said there's a possibility, and there it is today. But into an 8 moving average and rejected, into and below a 50-day moving average as well, not quite at the top of the little channel as well. So again, everything's still trending to the downside. Yes, there's some rallies, but there's rallies in the midst of a decline. So that's the same thing in the S&P, the Dow, NASDAQ as well. It's up to the bulls now to sort of overcome this and go higher. Let's take a quick look at treasuries, because treasuries were strong and then sold off. You can see they made a new high into the 20. The target area was 130. It hit that and then reversed. It made a new low. It's just holding now at the breakout area. So essentially it broke out and is holding the trend line and holding the breakout area for the time being. So treasuries still look reasonable for now. The yen, very quickly, the yen is holding as well. Made a new high today from the last couple of days, but got rejected a little bit, but still holding reasonably well. Gold we can look at very quickly as well. Gold still holding. Green candles, still looking for higher highs here. And let's look at crude. Crude, after tagging 99 and retracing into the 618, almost a 50% retracement, and 96, 96.50 or so, almost 97. Bounced today, decent, and then maybe going back toward 99 plus. As I said, if it gets back to 99 or higher, clears the dark cloud cover, you're looking at 101 to 103. So that looks good there. Let's move right over to small caps, and then maybe we'll go right to the VIX. There is the small caps below the channel, below the trend, into the 50, bouncing. Harami, slight bounce on Friday, bigger bounce today, but back toward a resistance area, back toward a polarity area, right at 111.50. So this will be another really important spot for small caps and everything else as well. The VIX, despite the markets being as high as they were, went higher. So it gapped lower, it went lower, did not make a new low. And it's still trending higher, and then eventually finished the day at the top, at the high of the day, as the markets were selling off a little bit. So a little bit of a weirdness there. VIX is green, markets are green at the same time, simultaneously. So a little odd there for sure. Right into the 16 area, which is a zone of potential resistance, but I'm looking at if this continues higher through this area right here, you're looking at 18 to 19 as your next target on the VIX. So certainly a little bit of an oddity there. We'll have to keep an eye on what happens overnight as well as tomorrow on the actual direction this market takes. If the VIX actually continues higher, and this being an anomaly that the markets went higher, it'll be temporary, and then that should go lower. But the VIX looks very strong. All the moving averages are starting to cross over. So it's only adding strength with a nice rounded bottom here formation, which is pretty bullish overall, I'd say. But let's see how it goes. All right, catch up with you tomorrow.